HIMS and HERS stock has put investors on a roller coaster ride in 2025. It started the year trading at around $25 a share. It soared all the way up over $70 a share before crashing back down to around $25 a share. And now it's back up to over $62 a share. So it has been a wild ride for investors, to be sure. Of course, I'm still happy about the company's results. I had the stock rated as a buy all year long in 2025. And overall, the stock is up over 157% year to date. It's been one of my best performing recommendations in 2025. But do I still think the stock is a buy right now? Or do I think it's a great time for investors to take profit? Or maybe both, right? I'll answer the question if I think the stock is a buy, hold, or a sell, and if existing shareholders should take some profits at these levels.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I first wanted to evaluate the company's revenue growth over its history. And we got the company's first revenue numbers in 2019 when it generated around 100 million in revenue. That has since soared all the way up over $1.8 billion in revenue in the most recent trailing 12-month period. And the company has added millions and millions of new customers, new subscribers to medicines. And more recently, the big demand for medicine has come from the GLP-1 weight loss and diabetes treatments from companies like Eli Lilly and Novo Nordisk. HIMS and HERS has benefited from that weight loss trend, from that trend of consumers looking to these weight loss drugs or weight loss treatments or diabetes drugs and treatments as one of the reasons why they're going to HIMS and HERS. But they have more medicines, they have more to offer than just the GLP-1s, but they are getting the benefit of that increase in consumers looking out, reaching out. Even if HIMS and HERS doesn't have those products, which there's been question marks, right? They get permission, they don't get permission, and then now they have it again. But even if they don't, consumers that are looking for those medicines will visit HIMS and HERS website and they'll give the company a chance. People are typically taking more than just one medicine, one medication. And so even if they go to HIMS and HERS and then they can't get access to the weight loss or the diabetes treatments, they might look at the company and find something else that they're interested in getting from them directly instead of how they used to get those medicines before. And given the company's phenomenal growth in both revenue and new customers, the millions of active users it's adding, I think there's strong evidence to suggest that people feel like they're getting a great value from HIMS and HERS in their customer value proposition. And then, of course, if you read my book, The 6-Step Framework for Evaluating Stocks and Making Money Buying and Selling Stocks, you'll know that along with the customer value proposition, I like to look at the profitability or the cash flow the business generates. It's very easy for a business to give you a great value, but what's difficult for a business is to give you a great value while generating sustainable profits. Because if a business cannot generate sustainable profits, it can't survive much longer and it can't continue to provide you that great value. It might need to raise prices or decrease quality in order to serve you that product so that it can stay alive, and therefore it would turn out not to be such a great value in the long term. So the balance of that, great customer value and profitability, doing that for a very long time, that's the biggest challenge for businesses. And HIMS and HERS is doing a great job, right? Their cash flow from operations was negative 100 million. In 2019, that's now up to 300 million in the trailing 12-month period. It's tripled in a little over a year, and it's gone up by over 400 million in the previous 5 years. So it's making great progress, and it's still in the very early growth stages. And so for the business to already be generating cash flow from operations at these levels in this early stage is a good sign for the long-term profitability of this business, right? So the cash flow from operations are growing very well. as is the company's returns on investor capital, which have jumped from negative 130% all the way up to 40% already. So 40%, if HIMS and HERS can maintain this level for the foreseeable future, for the longer term, shareholders will become very wealthy over the next decade if HIMS and HERS can earn a 40% return on investor capital in that time. That's a really strong number. And for HIMS and HERS in the early growth stage, with still a lot of revenue growth to be captured at these returns, I think it's an incredibly lucrative opportunity. One of the reasons why I've had this stock rated as a buy for as long as I have. So now that the stock price has increased by so much, the valuation is not as attractive as it was to start 2025. I initially calculated this business to be significantly undervalued, but now that the price is up over $62 a share, it's matched and exceeded my intrinsic value. So the fair value of this business, I believe, is around $60 a share, $60.52 to be precise. Current market price is slightly above that. If I give some room for margin of safety, I can say it's fairly valued at the current market price. And then when I look at valuation on a forward price to earnings basis, it's trading at a forward PE of 77, which according to its metrics and its performance, a forward PE of 77, I would say is also fairly valued because you saw the incredibly high and increasing return on investor capital, as well as cash flow from operations, as well as revenue growth. So it's delivering premium, super premium performance, and so it deserves a super premium valuation. So I believe this business is fairly valued to slightly undervalued, and then it scores very well on the other things I look at when I'm evaluating stocks. Of course, um, I highlighted two of the things that I talk about extensively in my book, and that's the customer value proposition and unit economics, which HIMS and HERS scores extremely well on in those two factors. By the way, these charts, all the charts you saw in this video, I got from finchat.io. And there's a link in the description where you can get a discount if you use my affiliate link. So to answer the question, do I still think HIMS and HERS stock is a buy? I last updated that recommendation on March 6th, and I reminded investors that I still thought the stock was a buy. And I'll update that today and say that I do still think it's a buy, even after it's increased by this much. Now, to the question, should existing investors take some profits? If you're already up over 100 and something percent, should you take some profits? I guess that depends on the individual investor. The valuation in the business, I see it still as a buy. But if you're that type of investor that feels um, a lot of negative emotion when you see your stock gains evaporate, and so you feel some regret, like, man, I should have taken some profits. If you find yourself having those thoughts, then yes, for you, I think it's a good idea to trim some profits just so you lock in some gains and give yourself some positive psychology to stick with the market, to stick with the stock market, and don't let those negative emotions hold you back from future gains, future stock market gains, because you're hesitant, because you have a negative feeling, because you failed to take any profits from the industry. So if you find yourself having those thoughts, then I think it's a good, it's up over 100 and something percent. If you want to lock in some gains, go ahead and lock it in. Um, Give yourself some of that positive psychology and proceed to move forward and find great companies to invest in the long term and build your wealth over a longer time horizon.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.